Greetings, Algo artisans. Is Bitcoin going to pull back soon? We're going to do a bit of charting today, a little historical look at the Bitcoin halving and how Bitcoin behaves around that halving, and we're going to jump into it right now. So let's take a look right at the charts. We're looking at the weekly chart, basically. It's a 5-day chart for Bitcoin. And I've drawn a line here for approximately where the halving is going to happen. It's about 6 weeks out, roughly, maybe 6-8 weeks. It's in the middle of April. We're now at the beginning of March. So the halving is timed based on blocks. When certain blocks are completed, a certain number of them, the halving happens, the rewards are cut in half. And when the rewards are cut in half, that means less Bitcoin is entering the market. And when less Bitcoin is entering the market, we're looking at supply shock in a way, right? This is a form of scarcity. The scarcity is increasing when it comes to the supply, the actual creation of new supply. And with Bitcoin, of course, we know that I think the last block they estimate will be mined in like 2040 something or 2050. But long story short, Bitcoin is going to be able to continue to be used. However, what will end up happening is there will only be a total of 21 million Bitcoin out there, right? There is a maximum supply. And the way that the value continues to rise is based on these halvings. And as the halvings occur, a lot of things happen in the space. A lot of people anticipate this scarcity. They start paying more for the coins. A lot of miners actually are interested in selling the coins. And there can and has often been a pullback right before the halving.
Is it over?
And Altcoin Daily actually does a really good cover of this. He looks at Rec Capital's X post. And I'm going to have a link to both Altcoin's video and to the X post from Rec Capital, who I do follow both. And I'm going to have that in the description. So please go ahead and take a look at their video. And as a matter of fact, I'm going to go ahead and play that video. And then we'll go ahead and review on the charts as far as what the percentages look like historically. So here we go.
Okay. In each halving, we see a rally into the halving. In the circle, a pre-halving retrace. In the red, the post-halving accumulation. And then, of course, in the green, the post-halving parabolic upside. The danger zone for the beginning of a pre-halving retrace is shown in orange. And currently, we're still in the blue, or the pre-halving rally frenzy.
Okay, so again, we have several weeks on the way out to the halving, and I'm going to go ahead and go back to some prior halvings on this chart. Now, this is a log chart. This is going to make things easier to see for back when the price movements were small. We're going to go look at the prior halving that was in 2020. This halving had a pullback prior to that halving, so price came down 20% right here prior to the halving, and within a few weeks after the halving, it was back up above its pre-halving highs, or at least testing its pre-halving highs. And as a matter of fact, if we zoom out just a little bit, prior to the halving, maybe 15 weeks, however long it was before the halving, there was a pullback of about 60%. Now that is a big halving, but I don't like to really look at that because that's the 2020 COVID crash, and this is a little bit individual. So 2020 is a little bit tougher to take a look at as far as using that for data because there was a bit of a black swan event, right? We had that massive COVID crash, but there's a 20% that was right before or during, and that might be one that's worth looking at, right? Let's go back to a halving that did not involve a massive economic crash. Now, the pullback before the halving in 2016, I probably would look at that as, there's a couple ways to look at that. There's the pullback prior to the halving, which is pretty small. Actually, I wouldn't say that's pretty small. That's about 30%, and that's significant. And then after the halving, price actually pulled down a bit further. If you wanted to extend this out, you could say that it's as deep as 40%. But prior to the halving, the pullback was about 30%. And then, of course, it went down a little further, and then it really took off shortly after the halving. All right. Okay, so let's go back to the halving in 2012. Now, the price is going to be a little different back here. There's a lot less liquidity in the market, and things just kind of move differently. But if you look at the halving that was, or the pullback, and this is a pullback of about 25%. So these pre-halving pullbacks do seem to really rotate around 20 to 30% when you're looking at what the charts, at least in my opinion, when you're looking at the actual pullback, not the 2020 COVID crash or this kind of weird spike that happened in 2012. I think 20 or 30% is a good number to look at. Now, here's the thing that I do want to caution everybody about. What we often have is this idea that, okay, we've seen prior halvings and they're all going to behave the same. And I know in finance, it's this time is going to be different, our famous last words, right? So it's not always the best thing to think that way. Now, there are differences in the market now. So if I were to say this time, time could be different. Well, there is some truth to that because it's always at least partially true, even if the probability is small. But the one thing we have to bear in mind here, and I'm going to go to a higher time frame to show you this, is that there have only been 3 halvings, right? And 2020's halving was, again, that was plagued by this black swan event of the COVID crash. So the data on 2020 is questionable. And even so, with there only being 3 or 2 data points on which we can rely, the data is not that strong, right? When I do back testing, I go back and I test 200 times per asset or per currency pair and per time frame, right? So I will test 200 times in the 30-minute for, say Bitcoin to the dollar, and then I will test 200 times on the 15-minute for Bitcoin versus, say, the 5-minute chart, just because things behave differently. To have 3 data points and really 2 or 3, because that 2020 halving is a little questionable, that does bring into question whether or not that data is very reliable. Now, I apply the scientific method to trading when I'm doing my back testing, when I'm developing an algorithm. That's all scientific method, and it's very simple, and it's not a complex idea. You get data, you study that data, you develop a probabilistic model for how the assets will behave based on that data. One of the key tenets of data science is the larger the sample size, the better the result. So when you have a large sample size, you're going to see something behave many times, and you're going to say, okay, this behaves this way 75% of the time. And I'm pretty confident in that. With 3 halvings, with a questionable number 3 in there, I might not be as confident as many that there will be a pullback before the halving. The probability is that there will be, especially given price action right now. Price is up at its near its all-time high. As you can see in the charts right now, you see price approaching this 68,000 really, and it's right above this resistance right here drawn in red. But I wouldn't bet as hard on that as so many people. There's a decent chance with the ETFs and all the institutional quote-unquote money coming in and some of the over-the-counter exchanges drying up. As a matter of fact, there's a big supply shock. There are a lot of reasons why Bitcoin may not pull back like we think it will. However, let's take a look at the charts and see what a 20 or 30% pullback would look like. I'm going to jump to a lower time frame, and we're going to go down 20% and then 30%. We're going to measure what that looks like. So here's 20%, and that's right at about 51,000, and there's a lot of liquidity there last I checked. Now let's go down to 30%, and that 30% is sitting at 44.7. These are decent areas for a pullback if it were to happen, right? Now the algos are 100% bullish, but when you have FOMO and you have really crazy price action, I'd rather rely a little bit more on price action than algos at that point, at least for short term. So, but we do have a lot of liquidity right here, right at the top of this 30% pullback, and we do have this consolidation right here, right at the top of this 20% pullback, right? So let me code this a little easier to see. When you have price action going back and forth a little bit, that creates a liquidity zone. And I've also looked and seen liquidity on the liquidity profile there. So there's a decent chance if price pulls back, we're going to see it pull back right down, very high probability to the low 50s. I think that's a good probability. It also could go as low as this, say, mid 40s, 44,000, even deeper possibly. If there's pullback, that's the look. But again, I'm a little cautious on whether or not there is going to be a pullback, just a little bit cautious. So I do hope this is helpful. Come on over to algofactory.tech. We can teach you all this stuff. It's actually fairly simple. Now there's a lot of things to learn. It takes time to learn it, but once you get the basics down, learning how to trade, learning how to build trading algorithms, learning how to just trade old-fashioned, all that stuff is just simply a matter of effort. We'd love to teach you. Come on over, www.algofactory.tech. Trade your job, upgrade your life. See you on the next one.